It's a pleasure to be here. Today's session, we have three great investors from the crypto space. And I'd like to give you the floor for a quick intro, and then we can go and dive straight into it. So we have, starting from the other side, we have Danilo from Morningstar, Yat from Animoca Brands, and Vineet from Cypher Capital. Please take a few minutes to give the audience a quick intro.
Good afternoon, everyone. I'm Vineet. I run Cypher Capital, which is one of the funds based out of Dubai. We've been investing for the last 3 years, backed by a single LP who is the world's biggest miner and coming up with a billion-dollar IPO in Abu Dhabi. And happy to support startups. Been on a flight for the last 2 years. Every 2 weeks, I've been on a flight meeting amazing people. And bear market, I actually made a lot of great projects which we have invested in. We are still investing. We never stopped investing. Happy to meet people as well.
So yeah, I'm Yat. I was just in the panel sort of prior to this one. I was talking about gaming. So we're known for gaming, but we've done over 450 investments in Web3, of which about a third is in gaming, but otherwise in L2, L1 protocols and everything else around to help build the space. Early investors in companies like Dapper Labs and Wax, Decentraland, and a whole bunch of sort of companies as well in the space. But unlike others, we're not a fund. We invest out of our balance sheet. So it's a bit different in the way that we have a horizon in terms of how we invest.
Awesome. Hi guys, my name is Danilo. I run Morningstar Ventures. Super excited to be here in Turkey. Beautiful energy, great community. We are also based in Dubai. Besides investing capital, we also build quite a lot of technology. So super excited to be here.
Amazing. So perhaps we can take a big picture overview and look at how the crypto investing industry has performed and how it has shaped over the past year. Would be very curious, super interesting to hear what you've seen over the past year, especially as we went through pretty brutal bear market. Not calling the end of it, but it looks very encouraging so far. If you checked how the market is doing, I think there's some nice inflow of positivity.
There's some hope.
There is.
So I think I had seen this on LinkedIn by one of the VCs there. I think the last 2 years saw to it that tourist VCs went out. When it's a bull market, everyone is a Warren Buffett. And when it is a bear market, you really understand who's the one who sees the future. Because when the bull market was there, everyone was saying that I understand what crypto does to the world, what Bitcoin will do in Latin America and Africa. And suddenly Bitcoin dropped 20% and everyone was like, is it all going to end? So I think in the last 2 years, we saw real people who have been investing. I, in fact, have met Yat at so many events. He's been going all around. These guys have been building stuff. So I actually see real VCs still being active while the tourist VCs are hiding. You'll see them next year when the market's back on. But it's been a great time.
So generally speaking, the best vintages of companies typically happen in a bear market. When you think about the companies that people talk about, credit us as so-called great investments, we invested in OpenSea when it was a $2 million round, right? In Axie Infinity when it was an $800,000 round, right? At a sub 10 million valuation. This was 2018, 2019, right? Those were super bear markets. Like people say this is a bear market, then you haven't seen a bear market from our perspective. But either way, it's these times of struggles where the real builders come out. To your point, the tourist VCs are out, but the tourist VCs also means that there's less liquidity. It's a better market as an investor because you have the opportunity to spend some time to actually find deals and opportunities. But also the builders are true believers. Right? If you are doing it for the money only, then frankly speaking, you're probably trying to do an AI startup, right? Or you're trying to do something else to sort of follow the money, as it were. But if you believe in blockchain, if you believe in the future of crypto, then it doesn't matter when there's a bump in the road. You have a long-term horizon. And that's actually the only way to win. If you actually have a long-term horizon, then it doesn't matter when there's a bump. And so it gives us more clarity. So I think, and to prove the point, there is liquidity in the market. We've done dozens of investments. Cyphers, Morningstar, all those guys have continued to make investment in the space. And even we ourselves, for our own projects, have received investments from large pools of capital, like in Saudi, which we can talk about later, proving the point that if you have a good project, you can still raise money. It doesn't really matter what project it is.
Yeah, what I'd like to add is that, I mean, I've been in crypto since 2012, so I've seen a lot of ups and downs on a personal level. But as a fund, we've actually had also our best investment in 2019, 2020 in an emerging market, a layer one in Romania, right? So, which was also one of the Binance Launchpad projects. So I think we've already seen the proof that the great projects are the ones that stick around in the bear market. So we've already taken bets in times that are a bit tougher. And I do hope we have made some investments over the last 12 months which will prove that thesis. So we're definitely excited, for Turkey. I think it's a very interesting market, and hopefully we find our next bet here in the market.
Awesome. I definitely agree with everything that has been said. Also, we share cap tables and multiple investments with everyone here, so there's a lot of alignment in terms of how we see the world. And it does seem like a lot of the innovation and kind of foundational protocols were built in the previous bear markets. And there is some translation of that in the current market and the current cycle as well. Is there any particular themes that you were most excited, perhaps some subsectors or just general verticals that you think are some of the more exciting narratives in this cycle?
So again, for us, bear market investing is different than bull market investing. So, if you look at what happened in the last 2 years, everyone was going behind infrastructure, something that was raising a lot of money. We invested in Miston Labs, which raised $300 million. You knew that, they have the technology, they have the team. If they get the capital, they can build something amazing. Adoption comes or not, we'll see that in the future. But what I'm trying to say is, earlier it was all about investing in infrastructures. But I had a chat with Alex in Saudi on this. Now it's the time to actually invest on things that will get the next billion users. You can have as many highways as long as there are no roads, it's not going to lead up to anything. So now we are looking at things like real world assets. Why can't we get a house online and get liquidity in the market? We are looking at gaming as a play as well. People say DeFi is dead. I don't think DeFi has even started yet. Why do we need a third-party bank to give us loans? Why can't people in Argentina and Africa actually use USDT, get 2-3% interest rates, and have a stable financial system? So we're looking at things that will onboard the next billion users. I think CZ also tweeted that we are doing something for the next billion users. So hopefully the dApps are the next season.
So I think one of the differences about this cycle, I agree with everything that was said. And we're excited about gaming. We're also excited about education, for instance. And why? Because gaming, has 3 billion users. There's a $200 billion industry. But education, every person in the world has to do education, and it's a $5 trillion industry, right? So we look at the macro for the big industries that can onboard to Web3. But maybe one thing that is different in this cycle versus other cycles, bear aside, is that there's also a lot of opportunities in what you could describe as secondaries, right? Meaning that there are fundamentally good projects, but you don't necessarily have to invest in the new companies. Because when we invested in 2018, 2019, in NFTs and blockchain gaming, there were no blockchain game companies. So everything was a seed, Series A, Series B. There were no tokens in the market. There was no secondaries. But now, actually, there are many good projects out there, fundamentally good projects that are maybe undervalued. Right? And so we're reaching a different type of mature cycle where you can actually choose to invest in a project that's already live, that already has some certainty, which, by the way, is very normal in stock markets as well. So I would say, again, depending what kind of investor you are, you might come in a different lens. And so this comes to the point that I was making in my earlier talk, which is, as a result of that, gaming tokens themselves have recently received an index fund, an index token on Bloomberg, right? Which covers tokens like Axie Infinity and Sand and Mana and ApeCoin, and a whole bunch of tokens that are in that list. That would not have been possible 5 years ago because there was simply no ecosystem for it, which means that a new type of investor can now enter, because from their perspective, they think it's value investing, which then can eventually lead to things like altcoin ETFs, which today we were talking about Bitcoin and Ethereum, but eventually will follow other areas. So there's a maturing in the market, which means broadly a broadening of the market as well.
One thing to add on our side is that I think it's all about growth and basically development on both sides of the table. You have founders who have to become more mature when money is hard to get by, and you have to have investors who take more informed bets when the market is tough. So on our side, what I have noticed that, of course, we're being much more careful with actually talking to founders also in person, which is why we're doing more events. We're meeting people, in person, discussing how the funds that they're going to raise are going to be deployed. And I think that's what also gets me excited, is that I see that there is maturity coming. Like, my background is Web 2. When you raise money in Web 2, it's an entirely different approach than in Web 3. Like, in Web 3, money sometimes is too accessible for founders. So I feel sometimes founders are spoiled because they can get money pretty easily. So the fact that during difficult cycles, projections, numbers are becoming more important is what I think, is definitely a good development. So I do hope that this kind of will stick around in the bull market, but let's see how that goes.
Yeah, perfect. It's very interesting. Yet you mentioned a point about actually seeing a new type of kind of approach to investing, which is potentially what we call in traditional finance like growth equity investing. Do you see that as crypto investors, we actually covered the entirety of kind of the across different stages? I know we're doing a lot of investments, the pre-seed, seed, Series A. Do you think we need capital and potentially LPs that will, give that capital to VCs to steward into the later stages as well?
It's absolutely happening. I mean, even when you think about established funds like A16Z or, I guess the new reformed sort of Chinese version of Sequoia and other ones, they do later stage investments as well. I mean, we ourselves, for instance, most recently announced an investment from Neom, which is, basically part of PIF, which is essentially a sovereign Saudi fund who basically announced a $50 million investment in us. That's an interesting example of, yes, we're a mature company. Yes, it's for strategic reasons in Saudi, but that's a new market, right? It's a new, people wouldn't normally think of Saudi as a Web3 investor. Like, where did that happen from? But actually, there you are. These are new frontiers. And I think a lot of our industry has been sometimes covered by the US narrative, even though Web3 is not a US narrative at all. It's an emerging market narrative in the same way that, Bitcoin and the whole emergence of blockchain is really an emerging sort of narrative, not an established narrative. But we always look at US markets and say, oh, this is what the SEC thinks. This is what the US thinks. This is what a US VC thinks. But look at Asia. The Japanese Prime Minister has made Web3 as part of its focus, and there's many funds, including ourselves, investing in Japan. Hong Kong has basically very friendly crypto regulation. Singapore, Southeast Asia actually allow for retail trading on certain tokens as well. And these markets have investors as well that we haven't, that I would say people outside of those regions haven't tapped into. So there's a lot of growth. And of course, in Turkey, in UAE, right, with Cypher and so on, there's so many companies out here that are also deploying capital. So there is a range. But going to my earlier point, because the opportunity spectrum is expanded and the liquidity is much deeper, broadly speaking, than it was 5 years ago, you have other types of funds. You have hedge funds, for instance, entering the space, which wasn't before, right? Because you didn't have tokens. Now you have tokens that are liquid. So hedge funds are entering projects in that manner, which is another type of market, for instance, that didn't exist 5 years ago.
Yeah. Perhaps Vineet and Danilo have any thoughts on this? Also, like you mentioned about the having really great projects coming out of various emerging markets. So, like, how do we actually marry the capital that is potentially available in other markets with opportunities in emerging markets?
Sure. So we are actually a very young team. We're 25 people. I think we're almost like an airline. We speak 15 languages in our team. So we actually do like really great conversations with founders in their native language, which also helps sometimes. And then what we've noticed is that there's actually a lot of countries out there which are still very nascent. I mean, I'm from Switzerland, but I'm also Italian, right? Switzerland is quite big in crypto, but you look at Italy, which is still 60 million people, nobody knows blockchain. Nobody knows what's going on, right? It's still very early. So I think the fact of actually speaking to founders in emerging markets, it's also great practice for us. We've done our first investment also in an African company last year, Jumbo Wallet. So, this is, I think, something that is making us better investors in order to speak to new founders. And also, I think it's giving an opportunity to people who are in ecosystem that are maybe less developed, right? So I'm very happy that the Binance is actually, doing these type of events. I've heard of potential other blockchain weeks coming up in Europe in smaller ecosystems. So I think we all owe a thank you.
So when it comes to secondaries, I have a bit of a controversial view here as well. So, we're too early in blockchain. It's like, I consider it like the 1980s stock market in India, where people didn't understand what a share represents. Right. You had these scams which happened in India, Harshad Mehta scam and Ketan Parekh. But, the big guys were actually built over there. So when it comes to startups right now, they're building up. You don't know whether this is an angel fire, whether this is a Yahoo, or this is actually the Google. And adoption is building up. When you look at numbers, 400 million wallets exist. If I assume one wallet is one person, less than 4% of the world's population. 90% have no clue what crypto is. They just speculate, wake up in the morning and see Bitcoin price. But these are the startups which, if they land their runway to 2030 and have their capital management and keep on building product, keep on building their users don't land in, users are not in US in my opinion, they're in Africa and Latin America. Secondary transactions will happen. Hasn't Jamba raised some $40 million for Africa? So I think secondaries are happening as well. We have been supporting our startups as well, but more than just the money, it's also about helping them with a lot of other things like market entry, like giving them connections with, like in Saudi, for example, cracking the government market is tough. So I know this lady who has been helping her startups out of US to come and meet everyone, taking them to the gaming thing. So it's a collection of everything, not just money, but helping the complete support.
Yeah, that's a very interesting segue into actually how do we help founders. I know besides providing capital, we as investors actually come in with a lot of value add, or at least that's the expectation. So I'm just curious if you have any thoughts to share. Perhaps that we have even founders and builders in the audience, how they should approach investors. What should they be looking besides capital? What sort of value add you are doing with your portfolio companies, and anything else that you might think will be useful for builders to know?
Well, there's so much to go over, but maybe I'll highlight 2 points, 2 broad points. One of them is startup companies are pretty good typically trying to engage the investors, at least the good ones. They try to extract from them, get information, want contacts, they always hustle, right? I think as a startup founder, you cannot stop hustling. There is no such thing as, okay, I raised some money, now I can just sort of chill and build a product. That doesn't work this way in any business, but especially in Web3. And so that's one thing. But the problem, certainly that's true for us, is that we don't have the time to deal with every portfolio company all the time, especially when the market's sort of, depending on what it is, right? And so the one thing that we find that startup companies can be better at to bring value into the ecosystem is to engage other portfolios within the ecosystem. Right. So people do that sometimes in terms of, oh, you have the same investor. But actually, what you can do is you can actually leverage the common frameworks, and because it's Web3. So for instance, because OpenSea is one of our portfolio companies, or our Magic Eden, any NFT project can easily plug in. We don't actually have to make the connection. We don't have to negotiate for them. They can just really easily build on it because Web3 has a network that is composable on top of it. So you don't have to say, can you please introduce me? Just do it, right? And then we can endorse it, right? And so that's much faster and more scalable to do that. And for us, when we're thinking about the Mochaverse, that's kind of one way in which we're trying to tie the network effects, where you can now build on top of platforms through the Animoca network without actually necessarily having to talk to someone directly at Animoca, because you can work with any one of the 400 plus portfolio companies through that kind of network effect and the networks themselves. So that's kind of one thing that, so in other words, don't just leverage DVC, leverage also the nodes within the network itself that actually becomes helpful, I think is one thing that's useful. And of course, in Web3, unlike other projects, community is so important. Because the relationship of a community in Web3 typically is that of a co-owner, right? Because they own, by owning a token or by owning an NFT, they kind of become a quasi-stakeholder, right? Like they're a stakeholder, a quasi-equity holder of sorts, which means they're your community, right? And if you can leverage them, then actually you can harness that power. And I think the good projects know how to do it, and the ones that struggle sometimes don't know how to leverage their community, which is really their biggest asset.
Yeah, so I'd like to take a paragon from Web 2. If you look at startup founding in the US, with the culture that Y Combinator kind of brought to the table, where the founder is the boss, the VC should be excited to be able to support the founder, right? That's something that kind of was actually stirred ahead by the American ecosystem. While in crypto we have this in a way with regulators, right? We have the regulators who should actually open the doors for the founders. While there is, of course, some nations out there and ecosystems where we know and we can see as investors that founders are really struggling. They have to stay anonymous, or they have to create offshore entities. There's a lot of time that is also wasted and opportunity that is stifled because of regulation. And then in Paragon, if you look at what's happening where we're based in the UAE, I think it's amazing because we have regulators who are actually really open to bring founders to the UAE. We have Ras Al Khaimah recently who started RAKDAO. We have ADGM in Abu Dhabi. We have the VARA. And I mean, I've actually been able to meet with these regulators, and they're very open to speak to founders because that's, I think, how it should be. It's just that it's going to take a while. So I do hope that in Europe we will have some ecosystems who are going to be more welcoming and actually approachable. So I really think approachability is the key to kind of also get founders to be more confident in that what they're doing is not only legal but also like something that is sustainable.
So for me, other than all those things, if you look at Dubai, for example, or UAE, for example, we built the first co-working space that's free for everyone. So, you can come to JBR and work from the Cypher hub. Polygon uses it, ICP uses it. A lot of people do events, sit there, they work out. So this is an actual ground thing. We help people with media, we help people with events. A lot of those things happen. But something that I personally do, I've been a startup founder for 15 years. My last startup failed at an 8 million valuation thanks to COVID. It was a travel startup. Is to actually help these guys understand risk management. There were these investments where we made and the token went up 100x's or whatever, and they had these multi-million-dollar treasuries, which they never really converted to US dollars. You don't need to sell, but you can do an OTC so that you get your runway for the next 5 years. Why do you see these startup founders really floundering? They're just in a situation where they can't build anything. So I think the whole experience sharing is critical. How do you run your company? How do you build your P&L sheets to actually land up when 15% of the world population is there? When you are in Uber, where people can book a cab on you, where people can order, but you need your runways, and that is the experience that we get from our end as well.
Got it. That's super interesting. And we mentioned a few points about how crypto investing is quite different and actually changes a lot of things compared to traditional VC, and not actually having restrictions on borders. We don't have to sit in Silicon Valley in order to raise funds, for example. Do you think crypto also brings some innovation and disruption to our business? So on the previous cycle we had investment DAOs. Do you think that is meant to be a lot bigger, perhaps even replacing our jobs altogether?
So tokenization of VC is actually happening, because this was one of the stages where I said, there's this company out of Dubai known as Shisha Finance. This guy had made Alphabet, and he basically built up somewhere where retail could invest in projects. And we saw the projects. He invested in Bondly, which is one of your portfolio, which opened up at a 6 years. Where does retail get access to that? But again, it's not a complete community-run initiative, because in the end, the fund manager is critical there. He needs to pick out the winners. So I think a lot of that, you can consider it a real-world asset, RWA thing, is happening. But I'm pretty sure, there will be soft banks in this industry as well.
So I don't think of it as the same sense of disruption. There is disruption, but I think of it also as an additional source of capital that competes, right? So I think VCs will be around. I think expertise is needed. But for instance, take DAOs as an example, right? There's $18 billion now sitting in DAOs that are community run. One DAO that we were quite actively involved in is ApeCoin, probably a $1.4 billion DAO. And every investment decision, or not investment, grant decision, as you want to call it, a funding decision, is done by a community that votes on it every single week. Which means that when you're fundraising, you're no longer fundraising to a VC or a set of VCs behind closed doors. You're fundraising in public. You're showing your business plan. You're explaining everything like a public grant. But you could raise, there was one grant that received literally $10 million, right? So my point basically, and also the way that you raise the funding is you lobby the community, right? You're like, hey, this is great, you should vote for me, right? Which is very different from, working with the VC in closed doors. So I think that is a disruptive and additive element. which means that they're really good in community building, then you can actually maybe raise money from a DAO in a manner that you didn't expect before. And I think most people here might not even realize that there's so much capital in DAOs at this moment in time.
Yeah, just one thing to add is that, money is important, right, for everybody, whether you're an investor or not. And knowing how to manage your money is something you don't learn at school. And the fact that crypto is accessible to the young generations teaches them how to manage money and how to allocate money. Doesn't matter how big it is, but this is something that I think crypto is doing a great favor to the world, which is to teach youngsters how to, take risks, how to burn their fingers maybe early. That will, avoid them to burn them in a much, worse way in the future. So I really do think that the fact that crypto is accessible is actually educating a lot of the new generations who are, investors in their own way.
Yeah, no, I totally agree. I think community-driven investing and investment DAOs are super complementary to what we do, and there will be a role for us as well in the future. And with that, I'd like to thank everyone on the panel for sharing your insights. Super interesting. I hope the audience also found it useful. And yeah, thanks a lot, and enjoy the rest of the day.
Thank you.
Thank you.